Are you a trader or are you an investor? Which one are you? Hello, everybody. I'm Karem Rahimtollah. Today, we're going to do our Zoom room on the benefits and drawbacks of short-term trading versus long-term investing. Well, there's kind of a few ways to figure it out. So if you cry after losing money every day, you should be an investor, not a trader. Okay. Traders have to have, basically a stomach of steel. Okay. You've got to go into a trade knowing what your downside is, what your upside is, and you've got to be willing to get in and out right away. And you've got to use some system for it.
It's not a game.
Like my colleague Brian, he's got a system for trading. Okay, you don't just go in and say, well, my brother's cousin's daughter, who's got a friend at IBM, says their earnings are going to be really good tomorrow. Never, ever, ever works. Ever.
A friend's daughter is always wrong.
Brian, are you a trader or are you an investor?
Well, the way I approach it is, I got a life to live. I don't want to just buy a stock and hold it for 10 years. I want to make a trade. I want to get in on an opportunistic play and then get out of that as quickly as possible and take that money and just move on to the next. So my mentality is, patience is not my forte.
Yeah, you got to have a system. Do you use a system? I mean, you got to have a system.
Yeah, you for sure have to have a system. And we trade. I trade most of the time using overnight earnings strategies or W&M patterns, which are pretty accurate, 80% accurate over the course of my lifetime, predicting if a stock will move up or down. So everything that I do trading surrounds around a proven system that has worked throughout bear markets and bull markets and even flat markets. So yes, that is the fundamental foundation between all of my trades. But typically, I'm a short-term trader. A long holding period for me is a week or two. What would be a long-term holding timing for you?
2 months, be years. Could be years. Could be years. Yeah. For me, I'm looking at it in a different way. I do trade short term for myself. Yeah, that's fine. But I use that IBM cousin method when I do short term trades. So I'm not very good at it. That's why I stick to long term trades. Okay. So long term trading to me is trading that might be, over a period of a few months, 6 months, 8 months, a year, 2 years. What I'm looking for is a reason to buy a stock and why I think that stock is going to go up, or even that leap option is going to go up significantly in the future. But what I don't want, and this is something that I don't want, is I don't want the stress of being in and out of a trade or getting in fast.
It's too much. It's too much.
And you've got to have some kind of a system, and you've got to be able to be competent at doing that. So, when Brian issues a buy, you got to get in. When he issues a sell, you got to get out. So you've got to be up on your toes when you want to be a trader. That's just what a trader does. When you're an investor, you're like, okay, so bad earnings report, whoop-de-doo, I hope the shares go down so I can buy some more. That's my mentality. So there's a place for everything in there.
Yeah, and it's all dependent on the risk profile and the risk tolerance of you, the viewer, right? If you want instant gratification and you're willing to make a in and out trade and have the stomach for that, then yeah, trading is great for you. If you have a longer term risk profile and you don't want to take risk and you want to just let a trade or an investment just rise over the course of 6 months to a year, then you're a buy and hold trader. It's all dependent on your individual risk tolerance. And there's a way to do both, right? You could have 10% of your allocation in short-term trades and 90% in long-term trades. So there's a way to play at both sides and to what they say, have your cake and eat it too. So it's just dependent on what you as the at-home viewer trader are comfortable with.
Okay, so there's a question you can answer, and the answer to this question is all you need to do. If you answer it one way or the other, you'll know if you're a trader or an investor. When you go to Las Vegas, do you go there to play craps or to watch ABBA?
There you go.
That'll tell you. If you're a trader, you're definitely going to play craps. If you're an investor, you're going there to watch ABBA.
So wait, is ABBA having some kind of what do they call it, residency at Vegas right now? I'm not up on my ABBA tour schedule.
Your wife sent me an email, said you two were going over there and you booked 7 shows.
Burn. Okay, all right. Karem and the wife piece are taking off for a little rendezvous at the ABBA show. I'll have to follow up on that after this. In the meantime, Well, you guys can go watch ABBA and go sing Mamma Mia together. I'm going to be rolling craps. I'll tell you that much. And that right there is the difference. So if you go to Vegas and go to a show, you're a long-term trader. If you go to Vegas and play craps, you are a short-term trader. And there it is. There's your Zoom Room episode for today. Karim, that's it. We're done. Log me off of this. Have a great week. If you like this Zoom Room, click below, subscribe to our channel. If you have any ideas on future Zoom Room topics, drop a note in the section below. As always, I'm Brian, that's Karim. Stop hating, start trading. Thanks for watching, everyone. See you soon.